When investors look at memory and storage stocks today, Micron, SanDisk, Seagate, or Western Digital, it makes one feel uneasy. The stock prices are soaring. The margins look unusually strong. Memory chips, which were once treated as commodities, are now seen as strategic assets. This naturally makes investors pause and think. Is this just another cyclical spike in memory stocks? And will it slow down soon? To answer that honestly, we must understand what is driving demand. Once you understand the driver, it becomes clear that this is not a normal memory cycle. This is something fundamentally different. To see why, we first need to look at how AI workloads themselves have changed over time. In the early phase of artificial intelligence, models worked in a very straightforward way. A question went in, the model processed it once, and an answer came out. It was what is known as one-shot inference. This required limited compute and relatively modest memory. That phase is behind us now. The industry is drastically changing with the adoption of Agentic AI. These are systems that do not just respond, they reason, plan, break tasks into multiple steps, call tools, verify outputs, and then act. This process is called test time scaling or long thinking. Instead of generating a few hundred tokens per request, these systems can generate tens of thousands of internal tokens before producing a final answer. In complex enterprise workflows, token usage can increase by 50 times and in some cases even by 100 times. Every one of these tokens must be processed, stored, and retrieved in real time. And this is where the real shift begins, because reasoning itself turns memory into the primary constraint. When an AI model thinks, it creates what is known as context memory. This is AI's working memory. Technically, it is stored as key value cache or what is known as KV cache. This KV cache grows continuously as the model reasons. The longer the context, the larger the cache. And this memory must be extremely fast. If it slows down, inference latency becomes unacceptable. Initially, this data sits in high bandwidth memory or HBM, which is placed right next to the GPU. HBM is incredibly fast, but it is limited in capacity and extremely difficult to manufacture. Once HBM fills up, the system has no choice. The KV cache spills over into the conventional DRAM and then further into high-performance enterprise SSDs. This creates simultaneous demand for HBM, DRAM, and NAND-based storage. That spillover effect is exactly why the conversation now has to focus on HBM itself, because it is where the entire memory chain starts getting constrained. Before we go further, it's important to understand why HBM sits at the heart of today's memory imbalance. This is not a future concern, it is already happening. Leading memory manufacturers like Micron, SK Hynix have confirmed that HBM production is completely sold out through calendar year 2026 with negotiations already underway for 2027 supply. The core reason is manufacturing intensity. Producing one wafer of HBM consumes roughly the same fabrication capacity as producing 3 wafers of standard DDR5 memory. This 3 to 1 trade-off means that expanding HBM output automatically tightens supply across the broader memory market, including server DRAM used in data centers, PCs, and laptop memory, smartphone memory, and even enterprise SSD and NAND flash supply. As a result, enterprise DRAM prices have surged by roughly 170% year over year. High-end AI server memory configurations that once cost around $22,000 are now approaching $60,000. These price increases are not speculative. They reflect a genuine supply-demand imbalance. Taken together, this makes it clear that HBM is not just another memory product, but the pressure point that is tightening the entire memory ecosystem. If memory is the first bottleneck created by agentic AI, storage is the next layer that must scale alongside it. Memory alone cannot support agentic AI. Memory has to be augmented by large-scale, high-performance storage to handle the sheer volume of data these systems generate. Reasoning blocks, intermediate states, synthetic data, and planning artifacts all need to be stored. Synthetic data here means data that is generated by AI systems themselves through simulations, retries, and virtual environments rather than collected from the real world. This is why storage demand is shifting from terabytes to exabytes. Hard disk drives continue to store close to 80% of all data center bits because they remain the most cost effective solution at scale. High capacity nearline drives, which are always online hard drives used to store massive datasets close to data centers, are already fully allocated through 2026, with customers increasingly locking in supply for 2027 and beyond. At the same time, enterprise SSD demand is surging too. When DRAM and HBM are exhausted, AI systems offload context memory into high-performance SSDs that act as swarm storage. NAND flash prices have already more than doubled, and all of 2026 production is effectively sold out. As these memory and storage bottlenecks started showing up at scale, it became clear that solving them required a more fundamental rethink of how AI systems are put together. To address this challenge, NVIDIA reworked the way memory and storage are organized around the GPU. With the Vera Rubin platform, NVIDIA introduced BlueField-4, which creates a new tier known as the context memory. Instead of sending massive KV cache data over slow networks, BlueField-4 keeps this data within the compute rack. Each deployment can support up to 150 terabytes of local context memory, primarily using enterprise SSDs and DRAM. High bandwidth memory or HBM is chip-level memory that sits directly next to each GPU and is typically limited to around 1 TB per GPU. BlueField-4, on the other hand, operates at the rack level, where up to 150 TB of context memory is shared across multiple GPUs within the same rack. In practical terms, this means each GPU can effectively access around 16 times more memory than its built-in HBM alone, while the overall system gains access to 100 to 150 times more working memory at the rack scale. You can think of it like this: HBM is a GPU's personal short-term memory, while BlueField-4 is a shared workspace for the entire rack, dramatically expanding how much information the AI system can keep active at once. The existence of this design clearly signals that memory, not compute, is becoming the dominant bottleneck in AI systems. While agentic AI alone is enough to strain global memory supply, physical AI expands the problem dramatically. Robots, autonomous vehicles, and intelligent machines generate continuous streams of video, images, sensor data, and telemetry. Training these systems requires massive datasets. Simulating physical environments creates enormous volumes of synthetic data. Each physical AI system requires 3 separate computing environments: one training, simulation, and edge inference. All 3 of these are highly memory and storage intensive. This is why storage companies are signing multi-year allocation agreements, and this is the reason why high-capacity drives are becoming strategic assets rather than interchangeable components. As storage and memory are pulled closer to compute, the next natural question is whether faster networking can solve this problem at scale. A common misconception is that faster networking will reduce memory demand. In practice, networking introduces latency, and latency destroys real-time reasoning performance. Agentic AI requires memory to sit close to compute. As compute density increases, memory density must increase alongside it. This has forced a change in how systems are designed. Chip companies, memory makers, and storage firms now have to work closely together at the system design stage, rather than operating in isolation. Compute, memory, and storage can no longer be treated as separate components that are optimized independently. They have become strategic assets that must be co-designed to work as a single system. There is no scenario where AI workloads scale without a corresponding rise in memory and storage demand. That scale is only possible with architectures that deliberately integrate compute, memory, and storage from the ground up. And once you see how tightly these three elements now have to work together, the final shift becomes clear. Memory itself can no longer be treated as a simple interchangeable part. This brings us to the core conclusion. Memory is no longer a commodity. In the past, memory was largely a plug and play component. Manufacturers could produce standard DRAM or NAND, ship it in volume, and system builders would simply slot it in. That word no longer exists. Memory is no longer priced like a commodity tied to consumer electronic cycles. It has become a strategic infrastructure asset that must be designed in alongside compute and storage from day one. This shift is visible in company financials. SK hynix reported its highest performance in history in 2025 with revenue of 97.15 trillion Korean won, up roughly 47% from 66.19 trillion won in 2024. Operating profits surged to 47.21 trillion won, nearly doubling from 23.47 trillion won the previous year. This growth was driven by HBM revenue more than doubling year on year, with demand also spilling over into conventional server DRAM and enterprise SSDs as AI infrastructure expanded from training into large-scale inference. Micron has also seen a sharp rebound in pricing power and revenue momentum as AI-related memory consumption accelerates. Micron reported fiscal year 2025 revenue of approximately $37.4 billion, a 49% increase from the previous year. SanDisk's performance tells a similar story on the storage side. In its most recent quarter, the company reported revenue of approximately $3 billion and net profit of around $803 million, largely driven by enterprise SSD demand linked to AI workloads. The data center segment of SanDisk saw a 64% increase in revenue sequentially, that is, in a single quarter. These are not normal commodity margins. They reflect pricing power, long-term contracts, and inelastic demand. Now let us look at why this demand is unlikely to slow down, and there are three clear reasons behind it. First reason, we are still in very early stages of agentic AI and physical AI adoption. Most enterprise use cases are only beginning to move from pilots to scale, while consumer adoption is still nascent. At the same time, AI workloads are becoming heavier by design. Context windows are expanding, token volumes are rising, and systems are moving away from simple one-shot responses towards multi-step reasoning and autonomous workflows. All of this naturally pushes memory and storage requirements higher over time, not lower. Second reason why the demand is not going to slow down is because the supply cannot respond quickly even if demand were to pause. Building new memory fabrication capacity takes years, not quarters. Despite aggressive capital expenditure across the industry, meaningful new supply will not arrive at scale until 2027 or 2028. Demand, however, is accelerating right now, creating a persistent gap between what the market needs and what the manufacturers can deliver. Third and most importantly, unlike before, memory and storage demand is now directly tied to compute demand. As long as AI compute continues to scale, memory and storage must scale alongside it. This demand is not discretionary and cannot be postponed without slowing AI progress itself. There is no credible path where AI systems grow more capable without consuming more memory and storage, which makes a sharp or sudden slowdown in demand highly unlikely. Before we close, it's worth stepping back and connecting all the pieces because this is where the bigger picture becomes clear. The current memory environment is fundamentally different from past cycles. Prices are high because memory has become indispensable to AI infrastructure, not just during training but throughout inference and real-time deployment. Supply is constrained, contracts are long-term, and margins are structurally stronger because customers are locking in capacity years in advance to avoid being left behind. This is not just another boom. It is a multi-year realignment of global computing infrastructure where memory and storage scale in step with compute rather than lag behind it. Memory is no longer a commodity. It is a strategic asset that determines performance, cost, and competitiveness in AI systems. And that is why memory stocks are not just rising but staying strong. Thanks for watching. Have a great day.